How's it going, guys? This video is going to be the weekly breakdown of GJ, and I'm going to be showing you guys what I'm going to be looking for this week and some of the things that stood out to me when I first looked at this chart. And judging on how last week's weekly candle closed, we are in for quite an interesting week. So yeah, I'm just going to get into it and break this down. So we always start on the weekly time frame to first analyze what the structure is, and secondly mark out any key areas. So as you can see here, the weekly candle closed strong bearish, so our weekly structure is bearish. What we can do now is just mark out the highs and the lows of the weekly as a visual representation of the highest price last week and the lowest price last week. Something very interesting here is on the weekly time frame, we closed on a very strong level. We closed on a weekly support, which we've rejected 4 times before. So this was the first rejection of this price, well 5 times actually. This was the first rejection, this was the second rejection, third, fourth, fifth. So there is a very high possibility that because we closed on this weekly support, we're going to reject this area again. With that being said, we're going to have to wait for some bullish momentum to come into the market. I know a lot of people who would have just taken buy positions as they saw this weekly candle, you know, more or less coming to a close at this level, taking the earliest possible buys, but that's super risky, especially with such bearish market momentum. Once we drop down to the lower time frames, you're going to see how bearish we are in structure. But that's not to say that if we don't get that bullish structure flip, we can't take buys. It's just going to be a lot more risky. So I'm looking at 2 situations right now on the weekly. I have the current low marked out, and obviously that's on that weekly support. So the one situation is we get a weekly close below this area and a weekly candle close below that area and then retest it and continue bearish. That's my bearish scenario. My bullish scenario is we respect the support and we slowly start moving up to correct a lot of this move down, but that's going to take a while. Obviously it can take up to a few weeks, maybe a month or 2, because it was quite a strong bearish push, so we need to correct it. Another interesting thing to take into consideration is we were in a range here. I'm just going to delete this line for you. So we were in a range. As you can see, we faked out the top side of the range, and this was a couple of months ago. This was in October, and what happened was we got a candle close above this resistance, so outside of the range, and the very next candle came back into the range. Now when that normally happens, you normally test either the bottom or the top of the range. Whichever side you come into, it's going to be the opposite. So if you come back down from the top, you're obviously going to test the bottom of the range. If you come back into a range from the bottom, you'll test the top of the range, and that's exactly what happened here. We faked out, came back to the bottom of the range. Now if we're going to respect this range, which is a weekly range, so very strong, again this is a very strong key level that we're at, then there is a very likely chance that we're going to start moving up, maybe even up to this weekly resistance, and then see if we can get some weekly candle closes above that resistance and then carry on moving bullish. So yeah, weekly structure is bearish, and we obviously are on this very strong major level right now. So now let's drop down to the daily time frame. So now we're on the daily time frame. As you can see, when Friday's daily candle closed, we formed this daily resistance at this level over here. So we're just going to mark that in with our zones and with a horizontal line at the top, and then this is still representing our weekly high, and this is representing our weekly low. As you can see, the weekly lows also, because those are on these weekly support levels, those are made up of obviously these daily support levels, and you can just see how many times you've rejected this price before. So yeah, it's going to be very tough to break through this price, but again, we just need to see the candle formations. So the daily structure is actually bullish. So we obviously had that high, and this was the point which created the high. What we do is mark a line at the bottom of that point, and as you can see, we didn't get a candle close below that. It got very close, but it didn't close below that point. So what that means is that until we close below this point that we have marked out, that white line, we're bullish in market structure because we had our high and we haven't exceeded the point which created our high yet. So weekly market structure is bearish and the daily market structure is bullish. So now what we're going to do is we're going to drop down to the 4-hour time frame. Okay, now we're on the 4-hour time frame. we're just going to tidy up our zones. This is the same daily resistance which we had just formed. So I've just tidied it up, so we're just marking from the tops of the bodies to the tops of the wicks. So as you can see, that's also resistance on the 4 hour. And why that's also such a key level is we had this low formed over here, which means we're going to have a new level in which structure flips bullish. So at the moment we're bearish in market structure on the 4 hour. As you can see, we created this low. This over here was a leg which created the low. So if we get a 4 hour candle close above this level, we'll be bullish in market structure. Again, another confluence that buys are very likely to play out. So that's why that's another key level. Also, if we look left from the area over here to our next resistance above that level, you can see there's quite a lot of clean candles. So that would be a really, really good trading range to be looking at if we start pushing back up this week or over the next few weeks. Another scenario is possibly if we're going to continue with the sells, there's very choppy price action to the left, and with being on this very strong major level, what I'll be waiting for is honestly either us to come back up to these levels over here where we were forming support, and if these do start turning to resistance at points over here, then we can maybe start taking some sells back down to the low at this point. But to take sells below this current point where we close on the weekly, what I'll be looking for is definitely not these first sells if we do get down to these points, but I'd rather wait for the pullback and then some support to form, and then we can maybe take some sells back down to the low. But again, when you have choppy price action to the left over here, you want to wait for some clean moves to form, and then you can wait for a pullback and then get those clean moves back down to the low, because a lot of the time when you do create a low, you're going to retest it at some point. So rather wait for that. It's a lot safer than trying to take the initial breaks down if we are going to continue bearish just because of the price action to the left. It's not looking good at all. And the strong support level, I can't stress enough how strong the support level is. We've rejected it 5 times on the weekly time frame, which is a lot. So what I'm looking for is obviously sells if we create a new low, and then to retest a new low, I don't want to be in the initial sells, or sells if we come back up to these levels over here and start rejecting these levels such as 150-800, or even areas around here about the 150-200 sort of areas where it was previously support, and then hopefully it can turn into resistance. Buys, I would like to see buys above 150-800. I think there will be some really good buying opportunities above that level, especially because that would probably mean that we've formed a daily support on the strong weekly and daily support level. So that means there's a good probability that we're going to continue bullish. So that's our 4 hour kind of broken down. So on the weekly, we're bearish in market structure, daily bullish, and 4 hour bearish. So obviously at the moment it's a 2v1, but we do have the issue of the strong support level if we want to continue with the sell. Now we're just going to drop down to the 30-minute time frame, fix up our final zones, and look for possible early buy entries on the 30-minute if we can get some structure flip early on. So now we're on the 30-minute time frame. As you can see on the 30-minute time frame, again, we have our zone up here, which is marked all the way down from that daily resistance which it just formed. So we can tidy that up again. We haven't really adjusted the zone much. Haven't moved that top line at all. That is the top of the daily resistance, and now it's just been fine-tuned down to the 30-minute time frame. As you can see, we got some clean candles above that resistance to the next resistance above that level, so that's going to be a really key buying area. You can mark that out if you want with a green zone, just to indicate that if we do come into this area, we could actively be looking for some buys. What we see here is, again, we have strong bearish market structure, because we created this low here. So the area which created the low was obviously this level. So at this current moment, if we do want to flip bullish in market structure, we're going to have to get a close above this level. Now there's a long way to go to get up to that level. So ideally what I would like to see, so that we can get some earlier buys, is for us to create a new low at this point over here. So what that's going to provide us with is this new low, and this would have been then the area which created the low. So structure will flip above this level to bullish, then we're going to have that 2v1 bullish market structural bias. So we'll have the daily and the 30-minute, which are bullish in market structure. So if we get a 30-minute candle close above here, if we create this new low, so it'll look something like this, then what that means is the new 30-minute structure is bullish. So now buys are a lot more probable. That then mixed with the clean candles to the left, which I'll mark out for you guys, which is another confluence that we look at when trading. We want to trade into nice clean price action. So I'll mark that out over here. Obviously our zones we mark out in white, and then we can mark the top of the zone with the orange line. So what that represents is when we look left is a clean candles, and as you can see it definitely is from this point. So if we get that structure flip above this level over here, we got all of this to trade into. Now that's going to be some really nice easy early buys from a very low point, but what we need to see for that to happen is obviously this low to form, and then maybe if we start rejecting that area and start moving up, and then we can take some amazing buy entries from the lows here. But what we're going to need to see for that is some bullish market structure. Otherwise, trading into this area here with the clean candles, if we don't create that new low, is all going to be counter trend, because it's still technically going to be a 3v1 bearish bias, market structure bias, but that doesn't mean we can't take the bias, because again we have that confluence of the strong support, very strong key level. So we can possibly look at that and say, okay, that along with the daily structure, which is bullish, so at least we do have one time frame on our side. And then if we get the correct candle formations and the candle setups, high volume times, London open, New York open, maybe Asian as well, you know, you can take some really nice buy entries from the lows at those stages. So yeah, that's basically what I'm looking at for GJ. So a few things just to note: we on that key level, key weekly and daily level support. We have a current 3v1 bearish market structure bias. So sells are obviously the structural bias, but we have a lot more buying range at the moment. So if we break above obviously the marked out areas from the lows here, there's a lot more buying range. It's just going to be a little bit more risky. If we do form a daily support, what that's going to do is it's going to provide us with a lot more buying probability, because that means we're respecting the previous daily supports which formed at this level. So yeah, that will definitely be something to look out for. And otherwise, yeah, I hope you guys trade safely this week. I'll obviously keep you updated throughout the week on how my trades are going. And yeah, thanks for watching, guys.